watching CNBC-TV18. This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios here in Mumbai. I'm Prashant. With me, my colleague Nigel, and Surbhi is with us here on the program for the next 2.5 hours as well. Good morning, guys.
Good morning, Prashant. Good morning, Nigel.
Morning.
I think Nigel gave the most important cue as we were just discussing today's setup. It's Thursday, and that leaves just about, well, I count one day to go. I don't count today's. It's discounted.
I thought it was called Thank God It's Friday, or Thank God It's
Then
Thursday.
we start doing Thank God It's Thursday now.
Surbhi's in a good mood this morning.
He's in a good mood, so we'll have fun. I mean, let's just kick this off and set the ball rolling in terms of what the cues are looking like today. So, US stocks are up, and that's the good thing. Point number one. The bounce in US continues. The dip was bought. There was a dip after retail sales data was strong, but we ended higher. The Nasdaq ending at the day's highest point, 0.9% or so. Interest rates, market interest rates in the US also moved up. The 2-year, for example, hit 4.7. That was the high for the day, and it then retraced back to about 4.63. By the way, I mean, if you close above 4.5% this month, it's a powerful indicator, monthly powerful indicator, and that sets us up for 5.5, 5.6%. I mean, those are targets. But in any case, yields have been moving up sharply. In the last 2 weeks, for example, the US 10-year is up 50 basis points. I mean, that's quite something. The dollar index, it's up a little bit, 0.5%. We are closer to 104 than we are to 103 now. So that's the picture on your screen. And of course, I mean, what underpinned all of this was the fact that the US economy seems to be pretty resilient. Retail sales data was super strong. It's kind of becoming a habit. There's nothing sort of, middle of the ground in terms of the actual versus expectations. You look at the jobs number, which was shockingly strong, and you have retail sales data, which is also very, very strong, actually. The debate continues, right? I mean, even as the market has moved on, I mean, I don't know if it's really moved on. For now, the equities are higher. But the debate is on whether all of this strong data is really good news, whether this eventually will bring more Fed hawkishness, higher than perceived interest rates by the Fed, and higher rates for longer. So that's the kind of debate we are having right now. If you look at the rates market, that's basically telling you the answer is yes. Equities so far, and I mean, if you were a skeptic, you would say equity markets in the US have got blinkers on and they are marching on. But price action is what we have, and we'll pay attention to it on a day-to-day basis. The Nifty, just to come to Nifty and Bank Nifty price action, the markets here. So we had a good close, right? I mean, a good follow through after day before yesterday's rally. We are past the 18,000 level. We took out a small rising channel at 17,960. We closed above it, which also means that the Nifty is broken out of the big falling channel as well. Falling trend line from the high of 18,887, all the way down to where we fell on the day of the budget, etc. There's a falling trend line, and we've broken above it. We've closed above it as well. Next targets should be about 18,120. That's not very far away. I mean, 100 points will do it on the Nifty, but that's the next target. That 120 is the 50% retracement of the full fall from the all-time high to the low of the budget day on the 1st of February. Now, supports on the way down, the 40-day exponential and the 20-day exponential, which were resistances earlier. The levels are on your screen. 17,947 and 17,862 become supports in that sense, and they should ideally not be taken out on the downside if the rally has to progress. Bank Nifty, it's still not given a very decisive kind of breakout from its resistance zone. Bank Nifty needs to close above its 40-day exponential moving average. That stands at 41,857. So again, a good day should do it, not very far, but those are near-term levels we're talking about. And on the way down, Bank Nifty should not break 41,158. That's the low that we had recently. So just some levels and some kind of context to put the price action from overnight and where we might open up and trade. I think the SGX should come up on your screen. It's indicating a decent start the last I checked. So we will go with it. 50 points, I mean, 0.25% or so, 18,072. Guys, hi.
Hi, Prashant. I completely take your point on what's happening with the US market and that market, the equity market, having blinkers on, right? We were discussing this in Closing Bell yesterday. You've got all kinds of data that's pointing to, a very vibrant, sort of, not very vibrant, but reasonably strong, let's say, economy. The retail sales number that you mentioned yesterday. Yeah. You've got yields moving higher. The 10-year at 3.8 now. The dollar's gradually been inching higher. Actually, if you look at it for the better part of February, you've got to move towards 104 now. Does the US equity market care? Not at all. I think it's sort of looking at its own trend, perhaps. It's moving on technicals, perhaps. But that's an important cue. That market's going up despite a lot of the hawkishness and all this talk about whether the Fed is done or not. So that itself is a cue to watch out for. I then looked at the final FPI numbers as well. We know that FIs have been buying in. I just looked at the depository data to get the sense of what exactly has been going on. And the buying has been fairly robust. I mean, from that massive selling that we almost got used to. So these numbers, except the last bar that you're seeing, that's the provisional number. The other bars are the final depository numbers. So you look at that. I mean, you've got 1,700, 1,600, 1,500 crores kind of coming into the market, which is a very big change from the trend that we were used to earlier. The question really is that because today is Thursday and you anyway have the weekly expiry, will this move that's set in the market above 18,000, whether that pushes the FPIs to go ahead and cover more shorts? And we'll hear more from Nigel on that, on what the FNO setup is like. And last but not the least, levels, Prashant, of course, has already mentioned 50 DMA, 18,057. Let's see if we can cruise past that to begin with at least. And then the others that Prashant has been talking about. Finally, I'll also watch out for the Adani group of stocks yet again, because very interesting development. MSCI came out and said that they're pushing back the changes in the weight on two of the stocks, Adani Total Gas and Transmission. They're not going to do this in February. They'll now do it in May. So that's pretty interesting. The reason they cited, and I'm quoting it verbatim, potential replicability issues due to impact from price limit mechanisms. There's a lot of some technical wordings used there. Not quite sure what that means, but we're going to be discussing this with a lot of experts over the next 2.5 hours as well. But I guess, Nigel, the market, given yesterday's move, perhaps, and the kind of global setup that we have, looks all set to perhaps open up at least positive.
Well, that's right. Yesterday the big call was the Nifty had some unfinished business at higher levels. This morning, just looking at the data points and going by the SGX Nifty suggesting the big gap up, I'm wondering whether or not taking some money off the table in the near term could be a prudent strategy. The trend is up, but in the near term, you'd like to book some bit of profits. But let's run you through the setup then. We have crossed the 20 as well as the 100 DMA on key indices. That's the Nifty and the Nifty Bank. Now the final frontier will be the 50 DMA. Can we get past that? That's a crucial technical level. The global cues, well, equity markets are doing well. The Nasdaq did well. We have been pointing that out. There's a correlation between Nasdaq as well as the IT index out here, and that's being played out. But, a couple of cues coming there. The bond yield has moved around 3.8%. The dollar index is closer to around 104. And also, you have Brent crude that's holding above $85 per barrel. That's normally emerging market negative. So let's see how that plays out. And, the point that I made, since we're getting a gap up, we're going to be starting closer to around the 50 DMA. Maybe taking some money off the table could be a good strategy. In terms of the FNO cues, well, we're talking about the PCR. When it moves to around 0.7, 0.8, we see normally a bit of a bounce. Now it's moved to the higher end of the band. It's moving to around 1.4 odd. So that's another indicator that maybe in the near term, we could be in for a bit of a consolidation or maybe a bit of a downtake. The FI data in the FNO market, well, they added some mild shorts. The short positioning is at around 74%. Not too long ago, it was 84%. So some part of the short covering has played out. And on the option side, well, they bought more puts than calls. So in case things go wrong, there is cushion on the downside. But the encouraging part is they continue to write puts. And on an expiry day, that's weekly expiry that will play out today, you like that data point. On the call side, though, there was some writing. 18,050 call. Yesterday, it appears there was some writing out there. Though the 18,100 call, that saw some buying. In case things go right, then in fact, you're paying only 13 rupees and you're playing the upside with the expiry today. On the downside, 18,000 put, 17,950 put. There was writing being seen at those levels. So let's plug in the numbers then. Support for the Nifty, I think that base that we're talking about, 17,350 moved to around 17,550. I think the near-term base comes in at around 17,750, while on the upside, the 50 DMA, where we're going to start, that's a bit of a resistance zone. Similar is the case with the Nifty Bank, 41,200. That's been a good entry point, but the 50 DMA appears to be a bit of a resistance point. But if the Nifty Bank can get closer to that 50 DMA, then we are staring at all-time highs on the Nifty itself. So let's see how this plays out. But SGX Nifty indicating a start closer to the resistance zone. Maybe on expiry day, you'll want to book some profits.
All right. All right, we'll see. 18,073 is where the SGX Nifty is at this point in time. Before we start, let's quickly tell you what's lined up here in the first 30 minutes of the show. We'll get you updates on markets across the globe. On emerging equity market strategist Adrian Movat will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 this morning, we do a fundamental stock analysis with Amisha Vora of Prabhudas Lilladher.
Okay, let's kick it off then with the equity call. This one's coming in from Sanjay Mukim of JP Morgan. And he says that MSCI India has seen 5% cuts to the FY23 EPS estimates during the third quarter results season after 4% cuts during the second quarter. He says FY24 estimates have been more resilient, meaning implied growth has increased significantly. He adds materials and energy account for a large part of these changes, while banks continue to see upgrades and reduced FY24 growth forecasts. He says they remain overweight on financials.
All right, let's get you some money market views as well. On the rupee, we've got Parul Mithil Sinha of Standard Chartered who weighs in. She says that USD INR continues to face upward pressure in line with the upward move in the dollar and spike in US interest rates. 83 to a dollar continues to be a psychological resistance, and she expects 82.25 to 83.25 to a dollar range to hold. According to Parul, further moves in dollar INR would depend on global data, especially from the US, amid range-bound crude oil prices.
On bonds, Parul Mithil Sinha of Standard Chartered says domestic bond yields have seen marginal upward pressure on global rate sell-off post the strong US jobs data. The pressure on domestic market rates continues in the backdrop of higher than expected CPI prints, both in India as well as in the US. However, bond yields are likely to stay supported as scheduled auctions for the current fiscal year are almost over. Parul expects the 10-year bond yield to trade in a band of 7.3 to 7.4% for the near term.
Okay, we have plenty of stock-specific action that we're going to get to in just a bit in our special Top 10 segment. We're looking at Reliance Industries, Adani Total Gas, Adani Transmission, Adani Enterprises, ACCPI Industries, Patel Engineering, and Vedanta. They are stocks on the back of positive news flow. While we have only a couple of stocks that could react to potential negative news, one is IndiGlobe Aviation, and the second one is Adani Power.
All right, so lots of stocks to watch out for as always, but we've got a very special voice now joining in. Emerging equity markets strategist Adrian Movat is joining in. Decades of experience in this part of the world. Adrian, great to have you with us here. Thank you very much for your time. I just want to quickly pick your brains on how will markets settle down with the strong data that is incoming. The jobs number was very strong. The inflation print was not weak. The underlying components were strong, and of course now we got retail sales. So is good data good for markets, or is good data bad for markets? What's your sense?
Okay, so if we think about the two factors that are important for the market, which is PE, so a function of what the discount rate is, and the other thing is E. So last year was all about PEs going down as discount rates went up. I think this year is all about earnings. And when you read what other strategists are saying, they're very much focused on the recession, the earnings recession, and making bearish statements about the outlook for the earnings. If we go back to the PE story, look, I think the consensus is very clear that the Fed will have terminal rates at 5.25. Long bond yields will be somewhere between 3.7 and 4. And so the sort of PE to me is almost set. So really what I'm focusing is on earnings. And we're looking at companies that are focused on earnings and cutting costs. At the same time, if you get slightly better economic data than a bearish consensus has, that's also quite positive for earnings. So you see stocks like Amazon that's been very weak in this rally having a move yesterday. So to me, there is a chance of a soft landing, which is the US economy keeps on expanding and the deflationary pressures or the deflationary trend that has started in the goods sector broadens through that economy. I'm very intrigued by market performance this year because particularly actually in the last couple of weeks. There was a big consensus that China was going to outperform, that the US would do badly and the dollar would do badly. We're seeing the US market having a strong January and being quite resilient in February, whereas in China, Chinese equities are off quite sharply from their highs that they hit in the middle of Chinese New Year.
Adrian, good morning. Your sense on how this Indian market is poised? We've had a very interesting start to the year, underperformers for the better part of it, and then the Adani issue that we've been discussing. There are no immediate big triggers. The budget's over, the policy is over. How are you looking at India right now?
Yes, I think we've discussed this in the past. The Indian market was the big outperformer in 2022. You had the fastest growing major economy. Yes, inflation was rising, but inflation wasn't particularly out of trend for India, which tends to be a higher inflation economy. So the problem for India on a relative basis in 2023 is if the Chinese economy continues to improve as we move out of this zero COVID policy, then I think that is going to attract capital. And a second largest economy in the world accelerating is going to be very important for Asia, particularly for North Asia. The fact that Chinese start traveling again is also very good for the ASEAN region. It's also somewhat positive for commodities as well. And these sorts of trends are going to attract capital within the EM space, and partly that's going to be funded by money coming out of India. So it's not that India is necessarily deteriorating, it's just other countries around it, other markets around it are offering improved opportunities that weren't present there in 2022.
Hi, Adrian. Good morning. Nigel on this side. Adrian, in the past, you've said the trade should be short the dollar, which will be actually a positive for emerging markets. Now, the dollar index that was threatening to break that 100-odd mark, it's around that 104 right now. Do you believe this is, it'll continue its downtrend from here? And also from the emerging markets, what's the pecking order? You've mentioned that, there could be some outflow from India towards China in the near term. But what's the pecking order among these emerging markets?
Yes, so I think at the moment, China is sitting at the top. And then maybe some selected ASEAN markets, such as countries like Thailand, that would be a big beneficiary of increased tourist flow from China. As we move through the year, I think we're going to start to see some real opportunities in the semiconductor space, which is currently in a very deep earnings recession. But I would be looking to add to places like Taiwan and Korea around mid-year. When we move out with the ASEAN, out with Asia and emerging markets, I don't see very many interesting opportunity sets. The big outperformance of the Gulf markets, I don't think will continue. The oil price seems to, if anything, be in a weakening trade. And then when we look at the Latin American markets, at the moment, there isn't a lot of confidence in the outlook for Brazilian policy. So I think it's very much a sort of a China-led trade for emerging markets at the moment.
That earnings question, we were talking about that in the context of the US, right? But here in India, Adrian, how bad can it be? I mean, if China is reopening aggressively, not stock market performance, but I mean, they're very much focused back on the economy. I mean, the US, as you're saying, perhaps a soft landing, maybe no landing at all. It continues to do fairly okay, right? Europe, of course, I mean, now things are looking much better as compared to, say, 6 months back. In terms of the implications of that for Indian earnings, I mean, it kind of, Indian exports, Indian earnings, macros generally, I think it's quite positive, isn't it? I mean, the changed scenario in that sense.
Well, it's definitely more positive for exporters if global demand holds up better. So if Europe doesn't go into the recession that people were fearing because actually the energy costs, the impact of energy costs in 2023 is much more positive than we're expected, particularly for the consumer and the industrial sector. And that's pretty much what we're seeing at the moment. Then that's going to be good for those that sell into Europe. I do, though, think we need to be conscious if it's sectors like the auto industry, that, auto demand has been relatively weak. I mean, the retail sales numbers out of the US are good, but I think we've got to understand that this industry is going through a massive change. And if you're an auto company that doesn't have the right EV in place, I think you're really going to struggle. I think the consumption data also, let's be conscious that it might be more on the services side rather than necessarily on physical goods.
Okay, all right, Adrian, we will leave it there for today morning. Thank you very much for joining in. Great talking to you, as always.
Thank you.
Quick break on that note. We'll come back and, of course, get together with our list of top stocks to watch out for this Thursday morning. Welcome back. Here with us on Bazaar Morning Call, and we are now breaking it down into individual stocks that could be hogging all the attention today. Our list of top stocks to watch out for, and our entire team is standing by. Well, let me start with Vivek. Vivek, I guess we're looking out for the possibility of a block in Interglobe today. Tell us more.
Well, good morning. Absolutely right. So, what sources indicate to us is that most likely Vivek Agrawal, who's now, still classified as one of the promoter entities in the company, likely to sell almost 4% stake in the company via the block deal mechanism. Now, the floor price for this particular offer has been kept at 1,875 rupees a share, discount to the current market price, and the offer size is a little over 2,900 crores. Post this, similar to last time when there was a block deal in September 2022, there is again a lockup period of close to 5 months. That is 150 days from today's block deal that is expected to happen. Just to give some context, on February 2022, Rakesh Gangwal had said that he and his family would be paring down their stake in the company over a period of 5 years. And at the end of the December quarter, they held almost 33.78% stake in the company. That will now drop to a little over 29% stake.
Okay, all right, Vivek, thanks for that. By the way, yesterday the stock ended virtually at the low point of the day. There was a bit of a sniff, it seems, because the open interest build-up was close to around 15% yesterday on the counter. If you pull up the futures plate, that'll tell you cash market ended at the low point of the day. Futures, open interest up by close to around 15%. We highlighted this in closing bell yesterday as well. It appears the street is sniffing something. But Vivek, you're a busy man this morning. Adani Group, MSCI has deferred the review. Tell us more about that.
Well, that's right. So, it's a bit of a surprise announcement that's coming from MSCI today morning. So what they've actually done is that they've deferred the potential implementation as far as select Adani Group stocks are concerned in the upcoming February index rebalance. What this basically means is that out of the 4 stocks that were expected to see a slight weight reduction in this particular Feb review, especially the 2 names that will see an impact, that were expected to see a significant impact, were the cash stocks, that was Adani Transmission as well as Adani Total Gas. So now MSCI will implement these changes in the May review. Now, coming to Adani Enterprises, as of now, it is a status quo, so the weight reduction will happen. However, the weight reduction that was expected to happen of a little over $185 million would be slightly diluted because, what MSCI has had is that they've cited potential replicability issues and ongoing uncertainty with relation to key input data. On the back of that, at this point of time, they're going to treat the Adani Group stocks with a certain special situation, and which is why, what you'll actually see is in this particular review or this particular change that is expected to happen at the end of February, the potential impact will be diluted.
All right. Vivek, thanks very much for that. That's an interesting bunch to watch. Has been now for some time. Sonal is standing by with changes with regards to the windfall taxation. Sonal, morning.
Good morning, Prashant. Well, yes, some cuts that we have seen in this fortnightly review for windfall taxes for crude prices. For crude production, it has been cut to 4,350 rupees per ton versus 5,050 rupees per ton. The interesting part is that this time export duty on ETF, that has seen a sharp cut. It has been cut to 1.5 rupees per litre versus 6 rupees per litre, especially on diesel, because that has been seeing a lot of spread compression as well. So here, export duty has been cut to 2.5 rupees per litre versus 7.5 rupees rupees per litre. It will benefit the likes of Reliance Industries because majority of their exports are via diesel as well. Export duty on petrol continues to be nil. So yes, it is a positive news that is coming in for refiners and oil producers like ONGC.
Okay, sounds good. Sonal, thanks very much. But before you go, PI Industries stock did well yesterday on the back of results, and then there was a call as well. Any important takeaways?
Oh yes, so the commentary is very positive. The most important is that the company has not been seeing any decline or any demand destruction in the export market. So that's very important. They expect 20% revenue growth with sustainable margins of 23 to 24%. They spoke about working capital being reduced by 393 crore rupees in Q3, and that led to higher cash flows for the company. Cash flows from operations this quarter were at 687 crore rupees, which compares with 120 crore rupees. Export order book stands at $1.8 billion, and they're not seeing any slowdown in exports versus the other agrochemical companies that hinted that yes, there is some slowdown that they're seeing in the export markets. They expect double-digit growth in domestic markets, which will be led by new launches. This time it was muted, up 2% in Q3. FY24 capex will be at a higher end. It was 500 crore rupees in FY23. In FY24, they expected around 800 to 850 crore rupees. So the stock could see some incremental green in trade today.
All right, Sonal, thanks very much for that. More stocks with news flow. Ekta has got that list. She's standing by. Ekta, hi, morning.
Morning. Well, I'll start with Vedanta. I expect the stock to be in the green. They've emerged as a preferred bidder for a bauxite block in Odisha. So that stock would be in focus. Adani Power, the long stop date to acquire DB Power has expired. So that stock will be in focus. And Patel Engineering, they are L1 for 1,567 crores with its JV partner for projects in Madhya Pradesh as well as Maharashtra. The total order book now stands at over 16,800 crores for the company.
Okay, got that. Thanks very much, Ekta. We'll watch out for those stocks. And here is a quick recap of our list this morning. The ones that have positive news flow around them are Reliance Industries, Adani Total Gas, Adani Transmission, Adani Enterprises, ACC, PI Industries, Patel Engineering and Vedanta. Stocks that have negative news around them this morning are Interglobe Aviation and Adani Power. Okay, we'll take a quick break on that note. On the other side, we'll connect with Amisha Vora of Prabhudas Liladhar for a chat on the markets. Later, we will also be chatting with Vishnu R of Nucleus Software to discuss the numbers of the company.
Welcome back. Hope you're having a good morning. Well, the bulls are going to be happy looking at the screen because the SGX 50 is suggesting we're going to start off with a gap up of close to around 75 points. What happens from there, though, is going to be tricky. But let's get straight to some macro news that came in. India's goods trade deficit has fallen sharply in January to a 16-month low of around $17.7 billion. The fall is a relief for the rupee and is due to a steep fall in imports. Lata's with us. Lata, take us through this data point.
Well, I think the January trade deficit has many positives for the macros of the economy. The first one is what you mentioned, that trade deficit coming in a good, 16% lower than December. But it's not just that it is a 16-month low. The point is, even if you took the April-December average monthly deficit, it was actually 25.5 billion. So look at 17.6. It's a good 30% less than what we were ticking in the last 9 months. And the deficit, the reason is that it is largely because of a fall in imports. January imports was just about 50 billion. December was 58.2 billion or thereabouts. So January imports are also lowest in 16 months. And if you compare them to the average April-December monthly, they are again a good 17% less. We were ticking 60 billion every month. Now in January, it's only 50 billion in imports. And the key imports that have fallen, this is very important, it's gold and precious stones. And there's also a goodish bit of fall in electronics and chemicals and metals. I would assume chemicals and metals is also because prices have fallen. The other positive, and maybe the icing on the cake, is that services plus goods, if you take the composite trade deficit, it's down to just $1 billion. 1.2 billion to be precise. And this is quite an outlier number, because if you look at the April-December average, the monthly deficit goods plus services was actually 12 billion. So we have really, January has been a month of many splendors and positives. Very good for those of us who are tracking current account deficit and the rupee depreciation. This is certainly a strength. Just a little bit on the negatives, exports have also fallen. Exports have come in at 32.9 billion in January. That is, a good 8% lower than what it was in December. 34.5 billion. It's also lower than the average that we were doing for the last 9 months. Key exports that have fallen are textiles, engineering goods, gems and jewelry, all labor-intensive goods. So we should be unhappy about that as well.
Okay, got that, Lata. I guess, your point on gold imports falling, now that I think marriage, festive, all these seasons are done, maybe on that one number we'll have some respite for the next couple of
I think a bit
months.
of a one-off, because gold is doing so well as an investment. Yeah. So I don't think this is going to last very long. Maybe the sovereign gold bond is taking away some interest from actually importing. But nevertheless, I think gold import falling is a one-off.
Okay, we'll watch for the trend on that one, but at least some reason to cheer in January. Thank you very much for that. Okay, let's go ahead and welcome Amisha Vora, Chairperson and MD at Prabhudas Lilladher. She is joining us on this leg of the show. Amisha, good morning. Great to have you on as usual. First things first, I have to start with the whole Adani news before we get to anything else, because MSCI just told us this morning that these revisions that they were planning on at least 2 of the stocks, they've been pushed to May. Do you think this is going to offer any kind of relief on these stocks? Do you think it'll have any impact overall on sentiment, positive or negative?
I would view that in extreme short term. Yes, it would really give a little relief because the immediate change is postponed. But as you know, that they will be looking at it in May, which shows that there is a hanging sword on the head as far as MSCI weight and resultant selling is concerned. So, it still will have to work at finding its own stability with and without MSCI reduction in weights.
Okay, all right. Hi, morning, Amisha. Good to speak to you as always. What about the new age themes? Out of nowhere, some of these themes have come back, and they've come back in style. Paytm case in point. What's your view on them? Do you like any of them?
So it is not under our active coverage at this point of time. But on a very broader basis, one thing becomes very clear to us, that most of these new age plays do have a dominant position within the space that they are operating. They have raised money, so they have cash in the balance sheet. But above all, they've all realized that the next cash dose is going to be extremely difficult, and all are working on improvising their business model. So all these three, coupled with the fact that the valuations are down 70, 60 or 75%, on a broader basis augurs very well. Without coverage, the stock that we think is looking good maybe is Policy Bazaar, because within that space they have a very good niche positioning. Quite a few others I think also can turn around, but we would like to watch them for a quarter or two in terms of what kind of stability they are able to bring in their business model.
Okay, got that, Amisha. Just stay on. We have more questions for you, but we'll quickly get into an earnings call before the rest of our conversation. Nucleus Software reported a strong set of earnings for the third quarter. The company has clocked in revenue growth of nearly 40%. This is, of course, year on year. There has been a big jump in the margin as well, coming in at 28% from around 9% in the second quarter. To discuss this, we have with us Vishnu R. Dusad, MD and CEO at Nucleus Software. Good morning, Mr. Dusad. Thanks very much for taking this call. Let me ask you first about the top line growth itself. I mean, if I look at it year on year, then 40%. Even if I look at it on a quarter basis, it's 30% growth. Tell us what you're seeing across the business, what you're hearing from clients, and whether this kind of growth can be sustained in the fourth quarter and, more importantly, next year.
Thanks for having us over at CNBC. I would like to give you a perspective on where these numbers are coming from. We have been providing our products to both Indian as well as global software services, global financial services industry, banks and financial services industry, BFSI, for now more than 3 decades. And these products are so robust that they, in India alone, they support 40 lakh crores. 40 lakh crores worth of retail assets are either originated and or serviced and or collected using our platform. Now, this has been on for nearly 3 decades, and we are grateful to all our customers for giving us this opportunity to be of service to them using our intellectual property. So what was happening was the prices at which these were, our intellectual property was sold was, at ultra deep discounting, to use a phrase. And that is what we are going back to our customers, that we may not be able to sustain that ultra deep discounting. And we are grateful to our customers that they are appreciating the value of our intellectual property, and they have agreed to increase the rates of our annual maintenance contract, and that is where this jump has come from.
Yeah. All right, Mr. Dusa, good morning, and thanks so much for giving us that clarity. Well, in terms of the pricing revision, what percentage of your clientele or your revenues have agreed to this AMC price revision? Have the top 5 agreed?
Yeah. So the way we will need to look at this part, this particular question is, top 5 in what sense is the question. Yes, we are talking to all of them, and they are appreciating our perspective. And in some way, top 5 are agreed. In some other way, we are still to agree with others.
Okay, Mr. Dusa, let me try again then. What is the percentage of the increase that you're looking at? Point number 1. Point number 2, as a percentage of your portfolio, or what percentage of that have agreed to? So quantum and percentage already agreed to. Go ahead.
Yeah. So once again, I would like to repeat, we are talking to all our customers, and a whole lot of them have agreed. A whole lot of them are still in the process of understanding the perspective, and it is very difficult for us to quantify what you are looking for. I'm sorry about that.
Okay, but
actually, the percentage of the top 5 clients could be as a percentage of the annual revenues. I mean, so if we narrow it down like that, would you be able to tell us if the top 5 have agreed?
No, I don't think we would be able to. We do not want to give any wrong notions to the market. Sure. Yeah. So we yeah, please.
But, okay, so we won't press the point further. This is the last question on this point. Can you just tell us that are you expecting more price revisions in the 4th quarter or in the 1st quarter? Should we be prepared to see? So how much of the price kicker or how much of the top line kicker will come in because of additional pricing increases that you take in the next quarter?
Again, it's very difficult. It's very difficult.
Okay, all right. All right, Mr. Dusa, let's try to get a couple of numbers at least then. Your margins have soared up to around 28% odd. Was there any one-off in these numbers? What is the sustainable margin we could look at?
Okay, again, we do not give any guidance. So as a policy, we've been listed for now quarter century, but we do not give guidance. So,
but is there any one-off that at least you can tell us when is there any one-off in these numbers?
So what is one-off is this number of 169 is certainly not a regular number that we can look at. It has numbers from previous quarters AMCs which were not accrued because of.
Okay, Mr. Dusa, Before we let you go, then you have a lot of cash in your books. Your market capitalization is around 1,300 crores. What's the cash? I think you have 500 crores of cash, right, in your books?
That's right.
Would you like to give out a one-time, big, maybe a dividend, or do you have some inorganic growth on your mind? How do you want to utilize this cash? Very quickly.
Yeah, absolutely. Our board keeps looking at these numbers very carefully every quarter, every year, and has been coming out with buybacks. So they will certainly look at this year as well.
All right. So buyback this year. Is that what you're telling us?
I won't be able to say that it is this board's decisions.
Okay. All right. But you've done that in the past. You'd be open to it. That's what you're telling us. Thank you very much. Appreciate you joining in. With that perspective. Nucleus had a massive move. I mean, this was day before yesterday on Monday, from 400 all the way to almost 500, 120%, almost a 20% move in a single day. This was the day before. I think that was the earnings reaction which came through. So 475 now, though, on the stock is where we're at. Amisha is still with us. Amisha, just a quick word on some of the movers from yesterday, if you will. This is a space which took a knock after the budget, life insurance companies. But there are small bounces which are emerging. SBI Life, HDFC Life, and these names did well. Max Life, etc. Max Financial did well yesterday. Do you like this space? Have you added in this fall, or are you negative?
No, I think that the policy change which has come, which will have its impact next year. So earnings will continue to look muted. But a reaction also was very sharp. So we are looking at a kind of a bounce currently. But we're not we are not going overweight at this juncture. And we continue to remain neutral on the sector because, this was a big chunk which was coming. Because there was a complete tax arbitrage which was going on, and it will have its impact, I guess.
Okay, two other names. Apollo Hospitals, if you have a view, the management was with us, and the stock was one of the top gainers on the Nifty yesterday. The management did tell us that in the Apollo Healthco business, there are sort of peak losses, things will improve. And of course, they've promised the stake sale, which everyone has been waiting for, perhaps in the next 6 months, probable. I mean, can't hold them to that. So that's one. And the other one is Borosil Renewables. Again, a company we had on the program yesterday. Did well, numbers are okay. They've said revenues will double in the first quarter of FY24. Your thoughts, both those names?
So Apollo Hospital is under our active coverage. And we understand and we are bullish on that. That is also amongst one of the key recommended stocks within this sector. I think what we've been really liking is that post-COVID, there is a base impact because of which in the hospital business, despite good margins, there is a YOY negative impact, but which will get smoothed out now on. And as what you very rightly said, these are the peak losses as what we've been guided in their 24/7 business. So next year, there will be a positive base impact also on that. Plus, if divestment happens, we have a price target of close to about 5,400. So we continue to remain bullish on that space. Coming to your other stock, which Borosil Renewable, which is not under our active coverage, but having understood the business broadly, I think that they are also in a very good spot and they will continue to do very well.
All right, Amisha, very quickly, there's going to be a large trade on, on Interglobe today. The street was waiting for this. So the stock will be a little bit lower today. What's your view on the stock from here on?
So on a very broader basis, we have an accumulate on the stock and we think that the economics are gradually falling in place. This block, I think is a good thing that block gets away. It might take time for market post-event placement of block to adjust to this supply. But on a broader fundamental basis, we have an accumulate on the stock.
Okay, got that. Amisha, thank you very much. Great chatting with you as always. You have a good day and we look forward to our next conversation. As we take the break, the SGX Nifty is nicely poised with a gain of about 0.5%. That's what it's indicating. We'll take that break, and as we do that, let's quickly tell you what we've lined up for you over the next half an hour or so, and it's a packed next 30 minutes coming up. Anuj will join in with his take on the market setup today. We will also then, of course, get you all the top stock picks from our technical and F&O experts. Following that, Prashant will bring you the Market Laser segment, where we analyze stocks and sectors through technical lens. And before the market opens in the CNBC-TV18 Stocks Board, we will highlight the top stocks in news to focus on today.
Okay, welcome back. We've got, SGX indicating a decent start. So that is good. 90 points, 18,110. Anuj is here in the studios to run us through what he's making of things. Anuj, hi, morning.
Morning, Prashant. Just one of those days where, or phases rather, where the equity markets and money markets are moving in different direction. And I'm just trying to figure out who's right. The US bond yield, for example, has surged further to 3.8, but it's having little impact on the equities, and especially NASDAQ, the way it's rallying and is trying to negate a double top. Even the Nifty managed to close above 18,000, and Nifty IT has been the strong pillar for the market. That, along with Reliance for the last 2 days, has really been leading that uptrend. And even the banks joined in the last half an hour of trade. The big question is, can the market now make a move towards all-time highs, having put that 17,800 to 18,000 sort of band behind it? I think that really is the big question. Again, IT is going to lead it, or should lead it, because that's where you have strong momentum. And just an example of what US market is going through, Roku was up 11% after reporting a loss of $1.7 per share versus estimate of 1.72. So it's not as if, there was marked improvement, but the stock surged 11%. So maybe the new age stocks do well from here on, and you've seen some of that play out. Now, in terms of the Nifty levels, it's now above all major moving averages, and the support now is the 50-day exponential moving average of 17,935. And I think the next resistance comes in at 18,118, and if the SGX is right, we'll start right there actually. On the Bank Nifty, the level to watch is the 50-day exponential moving average of 41,811. If you cross that and trade above that, then maybe there can be some more short covering. Need to see SBI's behavior. That's been a bit of an underperformer. And I think my sense is today you might see a 3 p.m. move on the Bank Nifty. That's possible. So let's see. But clearly the stronger pocket is IT.
Okay, all right. Thanks a lot for that, Anuj. And that's been the case actually for the last couple of days. The IT index has come back and come back in style. Well, Manoj Muralidharan, VP Derivatives at Relicare, joins us. Hi, Manoj. Good morning. Tell us, what are the derivative strategies you have for us today?
Good morning, Nigel. Nigel, I guess last time, this Monday when I was on your show, I mentioned this concept of cost of carry and how the FIs switch their instrument from the option to future, and we might see the Nifty trending. Now, ideally, the data which might follow, I believe, is because we are entering the monthly expiry, we would see generally the positioning that we have a new contract is closer to 1 crore. So we might see that go up to even a 1.2 crores, because if you see the premium in the Nifty futures, which was there from October, November, December expiry, which used to be 80-100 odd points, is trimmed down to 20. So now the cost of carry is more prudent to be taking positions on the index futures. And so positionally, we believe March can be a better expiry, at least an 18,400 to 600 is very much possible. So coming back to today, intraday, we believe, yes, there is still some call writing evident at 18,100 to 150. So I'm afraid that might be a resistance intraday. And the irony is there is some put buying by the FIs, which has been done more in the Bank Nifty strike. So we believe that Bank Nifty might play a spoiler today, maybe in the second half. So we are not really expecting an outperformance, though there are stock-specific moves coming in. So better level would be 17,970 to go long on Nifty for a target of 18,100 to 120 on the futures. Bank Nifty might face a resistance closer to 42,100, and we expect maybe a 200-250 point fall on the downside. Stock specific, Reliance have extremely seen huge delivery-based buying yesterday, so we believe the stock has more potential on the upside. Though buying it closer to 24.12 to 24.18 is a good level. The target should be 24.68 to 70. Same goes with ONGC. 147 is a good level. We expect a target of 154 on the stock as well.
All right, got that. Manoj, thanks very much for the technical analysis today on the index as well as the stock ideas. We need to take a very quick break. We'll come back on the other side. Of course, we'll have the pre-opening rates coming through. And also, we'll have Renu Baid of IIFL Institutional Equities joining in to talk about the capital goods sector. We've seen some interesting moves there in this earnings season. We'll get more details with Renu.